Yakim, we have you up. Go for it, my friend.
All right. Well, wonderful talking to you. I have a question. It's more of a meta question, and specifically around trading. So I think someone in the group wrote they disagree about the experience part, as in, there's people who have 15 years of experience, but it's almost like 1 year of experience, but 15 years like repeated, basically the same thing. And I thought that's an interesting idea, and I wanted to hear your thoughts around that, and specifically around what you may have done that allowed you to iterate and really learn from whatever you were doing rather than repeating the same thing and not really progressing? Was there somehow in your learning a way of engaging with trading that made it something that progressed rather than stagnating for, a decade or whatever? I mean, you know more people than I who are trading and whether they are profitable or not profitable. What I've seen is there's sometimes people for a very, very, very long time not profitable. And so it looks to me like there's some way of trading and learning from trading specifically with the experience part that allows you to become profitable. What are your thoughts on that?
Yeah, so this essentially comes down to asking the question, why is it that some people can get profitable in a quote short amount of time? Let's call it 1 year. And there's other people who can spend a quote long period of time, for example, 15 years, and still not get profitable. There is a very big contradiction between the counterintuitive nature of the fact that some people get profitable relatively quickly and some people don't. So the first thing that comes to mind is improper expectations. The second thing that comes to mind under this umbrella is preconceived notions about what trading is and what trading should be. And the third thing that comes to mind is dogmatic beliefs. So, to repeat these three things, the first one is improper expectations. The second thing is preconceived notions. And the third thing is dogmatic beliefs. This is more or less just saying the same thing in three different ways to highlight how important it is to go into trading with an open mind. Because here's what happened if you don't. You watch a video on YouTube, some bald guy with a beard tells you that trading the trend is the best. So you just, it's not that hard. Wait for a trend, wait for it to pull back to a support resistance, and then buy with a 1-to-1 risk reward ratio. It's easy. I don't say it's easy, but just for example, you find some other bald guy with a beard on YouTube saying it's easy. Just trade with the trend, whatever the fuck that means. Buy at support, whatever the fuck that means. Use a 1-to-1 risk reward ratio. If you have a preconceived notion that that's what profitable trading looks like, you're just trading with the trends and you're buying at support, you then filter everything that you do when it comes to trading through the lens of that belief system. And then whenever somebody else comes in and says, "Oh yeah, I short the reversals," the quote reversals, right? I short if price extends really far in one direction, say to the upside, I short those. And people then you look, you're like, no, 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 you're doing it wrong. Why are you shorting that? Why are you trying to catch the reversal? The real money is in trading with the trend. So then you see two people start bantering over really subjective bullshit, which is not very useful for traders in general. It's not useful for people to just have a dogmatic belief. When you have a dogmatic belief about anything, it means that you're not open to looking at the reality of things in such a way that your beliefs might be more reflective of what the reality actually is. And the reality in trading is that literally everything works. You can trade with the trend, whatever the fuck that means. You can trade reversals or, overextensions and countering the market, whatever the fuck that means. You can trade support resistance. You can trade moving averages, Bollinger Bands, everything. Everything works in the right context, provided you have the experience to justify that what you're doing is going to work long term. And so I would say people can make a lot of progress by just abandoning their expectations because a lot of them are unrealistic. If you don't know, you don't know. This is a reason why we have things like saying cognitive dissonance and self-delusion or self-deception. It is because people claim to know things they don't know, especially if you're new. You should really refrain from having any type of really hard latched belief about anything in trading And instead, you could remain open-minded by taking everything with a quote grain of sand. When you hear somebody say, trade with the trend, say, okay, cool. I'll look into that. I'll test it. I'll get my own experience. We'll see what works. When you hear someone like me say, I like trading reversals, seems to work better for me personally, take it with a grain of salt. Just be like, okay, thanks for that tip. I'm going to go and look into that and experiment with it and test it on my own charts and get my own experience and see in what context that could work for me, if at all. So that's the first thing. Abandon those expectations, abandon the dogmatic belief thinking, and also abandon any preconceived notions you might have about trading. That's the first portion of this. That is just simply a mindset shift, that it's essentially just becoming more open-minded. The second and final portion of this is to do something that I've suggested for a long period of time, which is what actually got me profitable, which is just let experience teach you how to trade. Contrary to popular belief, you don't need a course, you don't need any audiobooks, you don't even need fucking me. You really, what 90% of your growth is going to come from just going to the charts, watching what happens over and over again, and then letting your experience be the compass that directs you on the map towards profitability. By simply seeing the same shit happen over and over, and then documenting your results in something simple like just starting a Discord server where it's just you in it. You post a trading view link of the screenshot of what the trade looked like when you entered, and then you post a screenshot of wherever it is you exited. So you have kind of before and after photos to start seeing the correlations between profitable trades and losing trades. And you also start noticing things that you could have done to have made the outcome result in a more profitable scenario a good chunk of the time. Things like closing a trade early at break even or a small profit or small loss if you don't think it's going to work out. It just starts training you to do these things. But I do believe that these two concepts, the first being be more open-minded and abandon any preconceived notions, and the second thing of just simply get experience seeing the same shit happen over and over again, this trains you to become good at the skill set of trading, as this process would train you to become good at any skill set. Ian right now is building a fucking brick retaining wall with steps and all this type of shit in his garden in his backyard. Ian's been watching YouTube videos, he's gone through trial and error, he's been doing all sorts of shit that he's learned here and there, and he's kind of figuring it out as he goes. There is no black and white rules to exactly how Ian should lay the next brick. Aside from like try not to make it look like such shit that nobody else buys the home there in England, but people probably still buy the home in England because people don't have a place to live. But that's beside the point. The point is any skill set you're going to learn ever in your life that requires discretion and that does not have black and white objective rules, you will learn through being open-minded initially, and then just simply getting the experience, then letting that experience dictate what your future decisions are to do the skill set in a quote. I'm trying to find the right word here. To do it in a proficient way. So those are the two things I think, Ian, I would say. Abandon any preconceived notions and beliefs, go into things open-minded, and then get experience without having the foggy lens of preconceived notions and dogmatic beliefs. What's your response?
Well, I like it. I do have a follow-up question on that. Specifically, I've been reading an interesting book called Thinking in Bets, and she made a point that the beliefs shape how we process information, which is really quite problematic because and it doesn't stop when we're smart. It actually gets worse because you get better at doing mental gymnastics and sorting through things in a way that then aligns. But you have basically a bigger computer to do that, but it's still late in your bias. And so, when you say, yeah, just abandon your preconceived notions and dogmatic beliefs, that sounds really great. But I do wonder if there's something that helped you with that. Did you read something or someone challenge your beliefs or whatever that you actually realize, oh, I'm really freaking dogmatic in that way of how I'm looking at trades, like because it doesn't look like something that comes very natural to human beings, because often dogmatic beliefs are also laced in with feeling safe and survival and whatever nonsense is in it, which is not true, but we still function that way.
So if I'm answering your question of, was there something specific that helped me sort of embrace this concept? Because what you've just said is like, Sometimes it's hard to seek to disconfirm our most deeply held beliefs. We're talking about things like political beliefs and intuitions. We're talking about things like religious beliefs, talking about things like the quote, best trading style. These are all things that can be very difficult for humans to do because it is counterintuitive. What caused me to start shifting the way that I was thinking pre-2020 was seeing a video towards the end of the year. It's a 10-minute YouTube video about Jeff Bezos sharing his management style. So me being the proactive guy that I am, I've already pulled up this video. It's right here. I am going to link this video inside the close friends group as well as the mixed trades group. The too long didn't read or the too long didn't watch of the 10-minute YouTube video, you lazy fuckers who aren't going to watch the 10-minute video that changed my entire life. For that video, the takeaway for me was that Jeff Bezos said the reason that he has a lot of people that are very productive and proficient at Amazon is because he likes to hire people who are right a lot, who are correct about things and predicting outcomes a lot. So he says is the thing that he has noticed about people that are right a lot is that they change their mind a lot. And he said anybody who doesn't change their mind a lot and is not seeking to disconfirm their most deeply held beliefs is massively underestimating the complexity of the world we live in. And so if you're a person that for their whole life, since you're a little kid, clings to one belief, even in the face of devastating evidence to the contrary of what you believe, you still cling to your belief. These are things that are held to some sort of a godly, glorious standard in fields like religion and politics and many other realms of human conversation. However, when it comes to the real world, things are incredibly nuanced and complicated, and there's an endless ocean of subtleties that govern the reality of our experience and the decisions we make and the actions we take and the beliefs we hold. If you as a human being are not constantly reevaluating what you believe to see if there are one of two things, either good reasons to believe it or two, good evidence to believe it, then you are massively underestimating the complexity of the world we're living in. And you are essentially existing inside a delusional sphere of your own thoughts and mental gymnastics to justify what you want to be true instead of believing what is actually true, or in most cases, like attempting to believe what you believe is actually true. So in that sense, I would say watch that video, Jack, and all the rest of you on this call. It's just 10 minutes. I am not over exaggerating when I say that that video completely changed my life. That video completely changed the way that I think at its core. I examined a lot of beliefs I had, and I was able to update a lot of my beliefs and become a better person over the years because I'm able to seek to disconfirm my most deeply held beliefs. Any beliefs I had that I think are, quote, correct, given the context of reality and evidence and good reasons, I kept them. But any beliefs that didn't seem to make a lot of sense upon closer examination and introspection, I abandoned them. This is why so many of you have seen me constantly update my trading approach, especially over the last few years. I continue to find stuff that works better and better and better and better and better. And then we get to the point where I'm now 8 years into my trading journey and I'm risking anywhere from $50,000 to $100,000 per trade, and I'm entering trades that have an incredibly high win rate. And all of this has come as a result of this thought process and this approach to thinking about things and beliefs and actions. So I would say, Jack, that is what helped me craft the current belief system I have and develop this counterintuitive nature of challenging your beliefs so that you can try to have beliefs that are more concordant with reality. And I would suggest that everybody watch that video that I put in the Nick's Trades group and the Close Friends group. What say you to that, Jack?
All good. I love it. I think it's very good, and I think it's very pivotal what you just shared. Uh, in having that openness to keep challenging, because the closer aligned your beliefs are to reality, the better you're gonna do. And I think that's especially true in trading. And so the dogmatic stuff, it's just gonna get flushed out. You're just gonna get, I guess, hammered by the market. You just keep holding on to stuff like that doesn't work. So thanks for sharing.
Absolutely, man. It's a really good question. The reason people become better is because they examine what they're doing, they reevaluate. Sometimes they look at evidence and they look at whether or not their reasons are justified or unjustified. And if you can find things that you can do better by being self-critical and also by allowing people with well-meaning criticism to criticize you, not a lot of criticism is well-meaning from what I've seen. A lot of criticism is just from fucking idiots who don't have the context, just spouting their opinion. I'm not saying listen to that because that is a waste of time to listen to. But I'm saying when someone comes to you and they are very proficient in whatever skill set it is you're doing, or they're very well versed and educated on whatever topic of subject matter it is that you're studying or examining, when they come to you and say like something like, hey, listen, Jack, I'm using this as a direct example because you and I have been working together trading the past few months. When I say, hey, Jack, listen, I think your trades might be better if you used relatively larger stop losses. And I think that this is the case because if you did, you would have a lower chance of getting stopped out, a better way of managing the open position, and you could also have a more reasonable profit target that's able to get hit better if you're using a one-to-one risk reward ratio and you're waiting for a quote better entry. If I were to tell you this and you were to instantly start debating me and saying that's stupid and you're trading against the trend and why are you only using a one-to-one? I saw a video on YouTube with a guy who only uses 1-to-3 risk reward ratio and up. If you were to start saying shit like this, you are challenging a person who is criticizing you, and they're not criticizing you out of like they're not criticizing you with a demeaning or condescending or patronizing tone. They are a well-meaning critic, like meaning they want you to do better. They want you to be good. They want to help you genuinely, but they see something that you're doing and they see that it could be better because of their own experience. That is a well-meaning critic. If you allow people like that who are well-versed and well-meaning in the topic of subject matter and they actually care about you in your life, if you accept criticism from them, your life can become so much better so easily. And before we move on to the next question, I'll finish with this quote. Um, a foolish person does not learn from their mistakes. A smart person learns from their mistakes. A wise person learns from the mistakes of others. When other people who are well-meaning critics come to you and offer you criticism and challenge your current beliefs, you should really catch yourself in the moment and remind yourself to be open-minded and take a deep breath and really listen what they have to say. Because if they are truly a well-meaning critic, the only reason they're saying something to begin with is because they want to help you and they care about you and they care about the things you believe. Because the things you believe influence your actions and your actions have consequences. Those consequences can be good or bad. Be the wise person. I encourage you all by learning from the mistakes of others. The mistakes of others will present themselves to you in the form of well-meaning criticism from a good friend or colleague or somebody who's an expert in a field of subject matter, whether that's trading or anything else. Was there anything you'd like to add, Jack, before I continue?
No, that's good. Thank you. Sorry, I was unmuted and typing something.
Yeah,
Yeah, no, that's good, and I think it's very essential. Anyone who's watching this, because we like to look at the charts, we like to place trades, we like to discuss trading methodology and all that, but sometimes these kind of things that we're discussing just now get left by the wayside, and it's really unfortunate because then we struggle for years and years and years, and we don't know why.
100%. Good stuff. Yeah, good questions and good conversation. So continuing forward, we're going to Merrick. Merrick, you are next. Go for it.
Hi there. I have a question regarding the situation that we see right now at the charts in CHF JPY and UAD JPY. So what we see is some kind of consolidation at the place where the price is there. And my question is, from your experience, if the price is consolidating in this area, is there a high probability of some kind of spike? The price is going still up and then maybe going reversal, going down, going into the profit, because that's what I actually think, and I'd like to know your experience about that idea that the price first might still go jump up and then maybe go immediately down or some kind of later. That's my question.
Okay, perfect. So I'll sum the question up into a shorter, simplified form while still capturing the nuance. The question essentially is after you enter a trade, does consolidation make a particular outcome more likely? For example, what Merrick is suggesting that here on this, for example, CHF-JPY trade that I'm in, price appears to be consolidating on, if you look at timeframes like the 4-hour and 1-hour. So what Merrick is wondering is, does this dictate any type of perceived higher probability of it going further up or down into profit? And if so, how can that sort of understanding be obtained? What I'll start with is by going to the actual chart, showing you what I think this specific outcome will still be, taking into account the fact that like the 4-hour and 1-hour is going sideways. And then I'll give kind of a more broad generalized term. Hint, hint, it's going to still end in me saying like, it just depends on the context and it's all subjective and discretionary. So just get more experience. But I understand that that's like the, okay, yeah, great, Nick, you say that about everything. So we're going to look at the actual trading opportunity. So my original analysis on this was based on the daily and the 4-hour. So if you were to ask me if this is consolidating, I would challenge the premise that this is consolidating at all. Because when I think of consolidation, I think of things like this. That relative to this time frame, to me, this looks like more of what I would call a consolidation. This right here looks like more of a consolidation. For this time frame on the daily chart, I would be very reluctant to call this right here consolidation. I would be very reluctant to label this as anything at all. Now, if price does this for like, say like another like couple weeks and it just starts going sideways for that, in that case, I would probably say like probably be better to just get out at break even and to find another trading opportunity and then wait to see if it just rockets further up and then reshort at that point, anticipating a pullback. But even if you do that, a lot of these things can be very hard to predict. If I had been in a short up here on this trade and then price started consolidating and then I elected to close at break even after a month while paying, let's say like $10,000 in swap fees, this ended up dropping. So I would have been wrong. And it's all could have, should have, would have, hindsight is 2020, and this is just cherry picking examples. So you shouldn't give a lot of merit to all the specifics of what I'm saying, but just the general subtext and context. Up here, if you would have closed this at break even after having been in for, this was like a month, like, maybe like a couple weeks, this went down a little bit, but it might not have gone all the way to a profit target had you been having a profit target that was farther away. It would have gone to a little profit, then it would have gone up, and this would have saved you. So we have an instance where looking at a quote consolidation would have fucked you because it went into profit. Then we have a thing where going into consolidation and then closing early at break even would have saved you because then it would have prevented a loss. The whole idea of doing anything specific just because you see the market quote consolidating, I think really lacks a lot of context. It doesn't capture the texture of granularity of what the trading decisions in the moment when a trader uses their subjective discretion and discernment of price action. It doesn't capture what you're actually likely to do given the context of all the other elements that have nothing to do with consolidation that are affecting that specific trade. Now, when I look at this here on CHF-JPY, I just personally, just my opinion, I would not even call this a consolidation. This, if we're accounting for time frame, right? I entered this trade, the first entry is like 2 weeks ago. It's just been kind of like hanging out at the same price. Now, if you want to go to the 4-hour and 1-hour, you could go to whatever time frame you want to say like, okay, now look at the 1-hour. The 1-hour is consolidating. Okay, sure. The 1-hour is going sideways. It's ranging. It's consolidating. Whatever labels and terms we want to use to describe this price action. But is this causing me to do anything different about the trade? No. Is it causing me to think that it's more likely to go up? No. Do I still think it's just as likely to go down as when I originally entered the trade? For now, yes. The answer is yes. I still think that this type of market where it's gone up and down and up and down and up and down, higher high, higher low, higher high, higher low, higher high, higher low, higher high. I just think it's still more likely to go down at some point, even if it takes like another week or 2 weeks or more. if and when it does finally work out, I say when because at some point it will reverse, even if it goes up further before reversing. It's just if it goes up further, then tugs back, I might get out at break even. If it reverses immediately from here, then we'll all have a nice big profit. Also factoring in the fact that I lost about $13,000 on the first trade that I closed at a loss before then re-entering after the price action developed. But still, if that $13,000 loss is offset by a $50,000 to $100,000 win, you know, it's still a profitable scenario. So with that being said, that is my take on consolidation, and that is me trying to frame it in such a way where it also accounts for the context of the trading opportunity, while remembering that just because something starts consolidating, you can have instances like we saw here where you close early at break even because you said, well, it's ranging, I'm going to get out. Then it would have gone into profit. But then up here, you close early and then it ended up going further up higher. So it would have saved you. There's real no way to use this idea of consolidation in a way that allows you to make a profit without first having the experience to justify the use of that analysis of the consolidation. And then also having kind of a little bit more grounded term of consolidation, which is very, very difficult to do in a subjective skill set like trading. So I still think CHF JPY is going to go down for now. And this was me providing the explanation and reasoning as to the context of what consolidation may or may not mean in a person's analysis of a trading opportunity. What say you to that, Marek?
Yeah, thank you for that answer. Can I ask another question, maybe a little bit similar to that? And that is, what about the spike that I mentioned, that maybe we can see the spike, or from your answer, I can maybe know the answer that it doesn't matter from your perspective. Daily candles, I guess it doesn't matter, but from the lower time frames, do you expect we seeing a spike up, still price going up?
So the answer is I don't know. If I'm answering directly, like I don't know, like it could, yeah, it's making higher lows right now, so maybe it could. But the other answer is like, okay, even if we looked at that and said it might make a spike up, what's the action? The action would be you'd either stay in the trade or you close the trade. Now, would I close the trade? In this case, no. So if we just work backwards from that, that just means that it apparently doesn't really matter to me if on the lower time frame it may spike in one direction or the other. Because even if it did that, if I am still convinced that the big picture move on like the daily chart, if I still think that this shit is really fucking far and I think it's going to pull back at any moment, and it would be a foolish idea to close the trade because if I close the trade, I could miss out on all the potential profit. Um, it means that I think it's a better idea overall, generally, long term in this trading context, just for CHF JPY to stay in the trade, even if there's a spike up, even if there could be a potential spike up. I recognize these types of setups as like at any moment they're likely to collapse. And then if you're not in and you were trying to play the game of trying to predict the minute 15, minute 5, 1 hour chart, thinking, well, there'll be a spike up here, so I'll close this here and then I'll wait for it to go make a higher high, then I'll enter there, and then I got a better entry and this and that. You then run the risk of missing the entire trading like opportunity, and you run the risk of missing the entire move downward should it start like collapsing downwards. So in this context, I think it's better for me personally just to stay in and to not try to play that game of like picking the little ups and downs in the lower time frame. Big picture, I think it'll fall, so it doesn't make sense for me to close long term. Does that make sense?
It makes sense. Thank you very much.
Yeah, very good questions. Thank you. All right. Up next, we have Jukas.
Hello, Nick. Can you hear me now?
Yes.
Okay, perfect. So thank you so much for this meeting. It's the first time that I'm here, so really appreciate it. I have a question regarding what do you do on how can I say, when there are economic release of on any currency pair? Do you trade it? You don't trade it? Do you affect your trades? It doesn't affect your trades? What are your thoughts?
The short answer is in general, 99% of the time, I don't do anything different or special or fancy during economic news releases. The only times I will give it a little bit of merit is when it's something crazy like a presidential election things can really go far in one direction with no pullbacks whatsoever. So you probably won't see me shorting Euro USD if it's spiking up during the day or two of presidential election here in the United States. Things like Brexit, like if they have a parliament vote, like when all that was going on a couple years ago, you probably won't see me like trying to like buy the GBP if it's like crashing downwards. So shit like that. But those are far and few between. In general, what most people mean when they ask that question is you're looking at the economic data, like the economic calendar of the scheduled news releases. Like, Nick, CPI is coming out. There's an interest rate decision. There's this and that. Are you gonna stay in the trade, or you should get out of this trade, because Jukas, it's gonna go down because they're voting for interest rates in Australia right now, and you're long on AUD, and that's kind of stupid. To me, the reason I don't care is born of the understanding that price just fucking goes up or down. And ultimately, you can't really predict what's going to happen. The only thing you have on your side, if you're a trader that uses charts to trade with, is visually what the chart is doing. Is it making higher highs and higher lows, or is it going down, or is it going up, or looks like it's going sideways? Do you think it's too far in one direction, so you think it's going to fall, regardless of what news says? It's using all those things that creates the trading process to be very simple and intuitive. The moment a person goes and starts looking at a bunch of different indicators or a bunch of different things that other people on Twitter and Reddit and YouTube are saying, or things like economic news releases, and trying to put together a speculative picture of what's going to happen, I find that it adds more chaos and complications to a person's trading process, and it further perverts an otherwise very simple process that someone could use to just look at a chart and say, I think it's going to go down. Cool. Now you just got to control risk. So you find your entry, calculate position size, put a stop loss or whatever risk structure you're using. Then the work is done. And that takes like 30 seconds. I typically don't look at news because I know that news is just a catalyst, a sort of enzyme to just cause price to go up or down quicker than it would have otherwise. If you look at it through this lens, news is almost kind of a blessing. Like if someone were to tell me, Nick, tomorrow there's a really huge red folder news event for Switzerland, so the CHF might be heavily impacted and you're short and you're risking a lot of money on that. You might want to close that trade, Nick. What happens if I close that trade and it causes a huge spike down on CHF JPY, right on tempo, right on cue? It just immediately after I close, a couple hours later, it drops. So then what if I enter, but then it spikes up, like when the news event occurs, and then I just add at the predetermined price level I was going to add at anyway, whatever it is that I've been sharing with you guys for days, and then it bounces there, right? News events and obsessing over them and trying to figure out, should I close the trade? Should I stay in? Should I not take that trade? Should I avoid that pair for the week? All it really means is that you're afraid of volatility. And volatility is the thing that makes price move, meaning orders coming into the market that create momentum and trends and moves up and down and shit like that. If you're afraid of that, then you're afraid of the very fabric that creates the tapestry of like trading itself. And I don't think it's very useful for a person to obsess over news events and let it dictate all of their trading decisions to where they're obsessively worried about it. I personally, just between me and you, Jukas, everybody else, like none of y'all listen to this, I don't even check the fucking economic calendar. It's just not useful or necessary or anything. It makes me do things that do not matter, like obsessing over news. And it makes me do things like that at the cost of the things that do matter, which is looking at a chart, asking myself if I think it's going to go up or down. If I think it's going to go up, I buy with a risk structure like a stop loss. And if I think it's going to go down, then I sell with a risk structure like a stop loss, risking no more than I'm comfortable risking per trade. If you just do those things, that's all that really matters. News, indicators, other people's opinions, those things are not that relevant or important. All that matters is what you think will happen and then how you're executing that idea with controlled risk. Now, I know I did a really long-winded response to this, but I wanted to make sure to provide the proper context because people have asked me that question many times before. And if you all are hearing it for the first time, I wanted you to have all the context and subtext to that. Let me know what your thoughts are, Jukas.
No, really appreciate. Really good answer. No, my thoughts are sometimes I don't trade based on economic release, but sometimes it's clear that like non-farm payrolls release sometimes happens and then it's a 40, 50 pips in one direction or the other. And I was wondering, maybe this affect the trade, because it might affect the trade. 40, 50 pips is no jokes. So I was thinking maybe you don't do a trade, or you wait for the release of the trade and then enter after that, because it's going to be like 40, 50 pips saved or maybe taken. That's what I was thinking.
Yeah. So what do you think now after what I've just said? If you were to like perhaps amend that belief system, what do you think now?
I don't know. To be honest, I don't know. I keep taking track of what I do and what I can find others people do like you. And yeah, just keep carry on what I'm doing. I don't chase news. I never did it actually, but it was just an idea that I had. That was just my curiosity about it, if it was a catalyst or not that drives the price, or just disregard it. So no, nothing. For me, that was a great answer already, and I just sit and watch. That's what I will do.
Perfect. That's exactly what I yell at everyone to do. Continue getting experience. So it's good that you're doing that. Thanks for the question.
You're
So
welcome. Thank you.
yeah, no problem. Next up, we have Felix. Felix, go for it.
Yes, hi Nick. Sorry, it took me a while to unmute me. Yeah, coming back to the CHF JPY trade. Fun question. How do you feel about going in and out of that trade a couple of times? Because, like you said, on the bigger picture, you think it's going to drop, and I agree. But when you went in and went out, I felt like you are looking at too small of time frames, so that, in my opinion, wasn't a good time frame to make a decision if it drops now or not, especially if you look just at the bigger picture. So it's a difference between, let's say, you could look at the daily and say, okay, it has to drop at some point, and then you look at the 1 hour or even 15 minutes chart, and then you decide, okay, it's going to drop now. That's why I'm going back in. I think that the difference between those time frames in time is just too big to make a decision based on that. So how do you feel about that?
So my answer is, if the question is specifically, how do you feel about going in and out of a trade, even though you think that the larger time frame is still likely to play out in one direction or the other, for example, CHF JPY, and the anticipated outcome being that it drops quite a bit on the daily chart.
Specifically on this trade, in general, I know what the answers will be like, but did you feel this time like, okay, I overdid it a bit?
I didn't hear the last thing you said.
Did you feel this time that you overdid the going in and out a bit?
Well, the answer is no. So that's what I was getting to in my response. I just wanted to frame it properly. Now here's the problem with giving reasons and specifics for any specific trade. If we're really being honest, the only honest answer I can give you, Felix, is that I felt like it would be a good time to just close that trade and tap out and wait. There was something that happened in the totality of the circumstances. It's not just that I perhaps glanced at the minute 15 chart and then a feeling of obsessive anxiety came over me and I just decided, oh shit, I just need to close the trade right now. It's not that that happened, and it's not that any one thing in particular happened. It's more of like the layer of experience insulating me from everything that's going on, to where I look at the chart and I just quote feel like I feel very strongly like it's just time to close. I've learned to just trust that judgment without trying to facilitate the production or furnishing any reasons whatsoever. Like it's just me saying, like, I'm looking at this and things just don't look good right now at this specific moment. Let me just tap out here. It's a small loss, as you guys saw last week. It was like $13,000 or $14,000 of loss when that trade had an $80,000 risk. This is like 1/6 of the way to the stop loss. Very small loss relative to what the potential to gain was had it dropped anywhere near the final target. So if I'm answering your question, do I think I, quote, overdid it? And really the question is, do I regret getting out of the trade just to get back in a second time, then close that, then get back in a third time like I am right now, or whatever it is. I don't know if I've entered twice or three times. Do I regret doing that? The answer is no. I stand by all my decisions. Now, was I right? No. I closed it and then it went up and then it started coming back down. Then I entered again. Then it shot into drawdown again on Friday, and it was like from break even to like negative 10K on the basket of trades. Then it went to negative 14K and then back down to negative 10K or wherever it's sitting right now. It is what it is. I'm not going to be right immediately every single time. But the individual decisions I made, I stand by those. And the simple reason for them is just pure intuition. It is literally that frustratingly simple. It is me looking at the chart, getting a feeling as to what I think the best decision is, and then relying on that feeling and trusting that feeling, knowing that it's grounded in 8 years of trading experience without questioning it and without trying to furnish reasons that I'm making up that may or may not actually represent the reality of why I chose to do what I do. Because each decision will be based on potentially hundreds of different pieces of context that cannot be articulated or communicated through words. Language is a really low bandwidth medium for trying to communicate very complex topics like intuition and why Michael Jordan dribbled the basketball around someone and then shot the three-pointer instead of going in and doing the layup, and why Nick Sean chose to exit a trade early just to get back in like a couple days later on the same trading outcome. These are all very nuanced things that all depend entirely on a trader's experience. And so I don't regret doing those. I would do the exact same thing again, and I accept the outcomes. Does this answer your question?
Yeah, it does now, because I recognized like a pattern which I did in the past, and I think everyone's familiar with this, that you enter a trade and you quit at some point because you think it's not going to work out anymore. And like an hour later, it starts moving in the direction you anticipated and you get back in. Just because you think, oh, I was right all the time, and you enter and then it's going against you immediately after again. And it looked to me like this. So that's why I wanted to ask how you feel about it.
Yeah, those situations are frustrating as hell, aren't they?
Yeah, for sure. Okay, thank you.
Yeah, no problem. Really good question. I'm sure that was able to be insightful for a lot of people. So great question. Okay, so for those of you just now getting on, if you would like to ask me a question, click the Zoom option to raise your hand. I will call on you. After I call on you, you may unmute your mic and we can have a little chat and I'll help you with whatever you need. I will give 1 minute, and if nobody has their hand raised within 1 minute, I will hop off this call. And if someone does raise their hand, I will stay on as long as you guys like to help you with whatever you need help with. All right, well, I don't see anyone else with their hands raised with any questions. So just to be sure, give it another 30 seconds. If you have a question, just raise your hand. Just ask me. I won't bite you physically because we're separated, but I may try to come at you virtually here. We have King Peggy. Go for it.
Hello, Nick. Could you hear me?
Yes, I can, my friend.
Yeah, you're right, mate. I've got a question about CHF JPY, if you don't mind. You already analyzed everything, as I know. And may I ask a question first before I question? Uh, t- is your analysis for CHF JPY, it's based on daily time frame?
Yeah, it's based on the daily chart. That's right.
Okay. So, based on daily chart, you think it's gonna be fall off. That's why you're getting short. I'm short as well. But as you analyze it again today and show the 1 hour, it was sideways to me in on 1 hour. And the problem is, to be honest with you, because it in 1 hour in the lowest time frame, the change is gonna be reflected uh, earlier. Depends on daily chart. You know what I'm saying? I mean, if I if I see the chart on daily, still good to get the short, but in 1 hour shows me it's it's sideways, which is reflected in a few hours, next a few hours or next a few days in daily chart as well, in my experience. So how we can deal with that? Because in daily chart, still in short, and in 1 hour in you know uh I mean the what is called sideways. So that's my problem, to be honest with you, if I want to explain.
Okay. You laid out a couple things there. Which topic should I focus on? Like what specific question would you have that you think could help?
Actually, I try to say in daily chart, I completely agree with you to short, but in 1 hour, it's gonna be sideways. In my experience, in shorter time frame, when it gets sideways, it happened to the daily and 4 hours. It's a little bit later than that. For example, next 2 days, and next 3 days. I try to say how we can deal with these things because, as I can see, it's sideways at the moment.
For me, in this specific case, on this specific trade, the antidote to this obsession over the quote sideways movement of price action is patience. If you think that the overall outcome on the higher time frames is going to be one thing over another, for example, down instead of up, then just stay with what your original analysis is. It may not happen immediately, but if you're right, and if you are in fact correct about the outcome, even just more than 50% of the time, you have a profitable trading approach, and all you have to do is be patient. If your idea was based on the 1 hour time frame, and you think that price is going to go up, and you think that if price breaks past that low, you want to close your buy in a loss under the low, and if it goes up, you want to take profit at some higher price up here that you think it might go to before stopping, then trade your idea based on this context of this much data on this time frame. But it's very difficult to try to track that onto the reality of trading a higher time frame, thinking that this move will play out, but then allowing yourself to get confused and consumed by all the complicated various time frames, some of which are ranging, some of which are trending upwards, and some of which could be trending downwards or having no clear trend at all for that matter. If you think on the daily chart this thing is going to come down, then just let that outcome play out. Patience is the antidote to the obsession about worrying over the lower time frames. Does that make sense?
Yes, makes sense. The patience is the only thing I don't have.
Patience, man. Sometimes I have to have Bonnie like tie me up with some rope and like change the password to my computer and take away my MetaTrader 5 terminal because sometimes, man, I'll get really obsessive. Oh, dude, I'm not even gonna lie to you. This morning I went to the 10-second chart and I almost made a decision to take a $100,000 trade on the 10-second chart because, bro, like that's how the banks trade.
Yeah.
I'm fucking
Yeah.
with you, bro. Everyone on this call, I'm just fucking around. That's just a joke. Okay, cool. So I'll stand here for another 30 seconds to see if anyone else raises their hand. You guys have questions, and if not, we'll hop off. Yeah, Yakim, go for it.
Yeah. So I have a question around the intuition part that you keep mentioning. And the specific part of a question around that is, do you ever get influenced, or does your intuition get influenced by other people's opinions? You have a discussion, people are asking questions, they have their frameworks and whatever. Because, in a way, intuition is a very great pattern recognition system, but it probably isn't without its flaws. And I do assume that there are influences that can shape our decisions without us knowing that this is happening. Have you noticed that that can happen? If yes, how have you counteracted it? If not, how have you stayed away from it?
So do other people's decisions or opinions about what price is likely to do influence mine? The answer is generally no. However, it depends on the person. We have a couple of our clients in here in the Next Trades group, for example, that are risking similar dollar amounts to me. So like 10, 20, 30, 40, 50K per trade or more. I'll take, for example, I'll name call. We have one of our clients named Josh, who is risking in some cases more than me, like on some trades. Like this guy on the AED setup that I called about 2 months ago, that guy made $100,000 on that one trading opportunity. And yes, it's a live account, and he withdrew it the next week. I mean, just crazy stuff. So if someone like Josh, who he has a lot of experience finding his own setups, and additionally, he uses my setups as a way to kind of peg what his decisions are against what my opinions are, and we kind of like bounce ideas off each other. If Josh were to come to me and say, he has an Australian accent, so he's like, yeah, Nick, I don't know if CHF JPY is going down, mate. It looks like it might be going up right now. I would wait, like I would weigh his decision a little bit more heavily than somebody just like random coming up to me and saying, CHF JPY is going up, bro. It's in an uptrend. Like if it's just someone random and they have no evidence to suggest that they even are profitable to begin with, and they're giving me their opinion, I'm going to be less likely to take them seriously at all. And in fact, honestly, I wouldn't take them seriously at all. I would just say, okay, then you should buy. Good luck for your trade. And just leave it at that. So the answer is it just depends on the person, but in general, no, because the abysmal success rate and the super high failure rate of people trying to trade dictates that most people's opinions are probably not worth listening to in trading. The best person's opinion to listen to is yourself after you've had enough experience trading, because nobody else will be able to frame their perceived expectations on what the outcomes on the charts will be against your experience. There can be somebody who's buying CHF-JPY right now as I am short, and then price spikes up, they close it in a profit, and then from that point, CHF-JPY drops past all my initial sell entries into huge profit, and then I close in profit, and then we both thought two separate outcomes would occur, and we both would have made money. This is the very dynamic, complicated, nuanced nature of trading. So in general, no, I don't let other people's opinions in general, 99% of the time, affect what I personally do or what I personally believe and think. However, I am more than happy to take someone's opinion seriously if I know for a fact that they are profitable trading and they're trading with very heavy sizing similar to me, and their opinion is not just backed by nothing. It's not absently forced upon me. Their opinion is backed by like, oh yeah, I think this is what's going to happen, and I'm putting my money where my mouth is because I myself, Nick, I'm risking $50,000 on this trade. That speaks to me more, and I would take their opinion a little bit more seriously. So I hope this kind of like captures all the detail behind it. Let me know your thoughts.
Yeah, I mean, that's useful, but I also think I didn't phrase the question appropriately. So for example, judges tend to be more harsh in their ruling when they are before lunch or something like that. So there's all kinds of things that influence us in our decision processes. When from how we're eating, sleeping, interactions we have, and all of that. And so I would assume that intuition is also under influence of all kinds of things that we might not even be aware of. But since you've profitable for a long time, maybe you are aware of some of those influences that can shape intuition in an unhelpful way. Have you noticed that or not at all?
I have noticed that. I will say that it still doesn't affect me that much, I believe, in my opinion. And I say that just because my results prove that whatever the fuck has been happening, it's been working very well for a very long time. However, that's not to say that we're not human and we're not going to, in the example of the judge scenario, for those of you who aren't familiar with this, they found that judges are less likely to grant someone parole or probation and an early release from jail if it's right before lunchtime and they're hungry. So, but if it was after lunchtime and the judge has just had a meal, they were a certain percentage more likely, like a statistically significant percentage more likely to grant someone parole and be more lenient after they've had lunch. And it just goes to show how all these external factors, like something as simple as whether or not your stomach is full or empty, can literally influence your decisions in a very meaningful way. So it's not to say that I'm not human and that I'm execute perfectly every time and that I'm never prone to the shortcomings of other people's opinions or assertions or other environmental circumstances upon exercising my intuition in a meaningful and proficient way. However, I do still believe, I'm just convinced from the data alone that for the most part, I'm able to use my intuition in such a way where I'm self-aware enough to recognize when certain things are, quote, off kilter. Like there's certain things in the environment that's happening, or maybe I'm feeling more anxious that morning because I didn't sleep well. And then I'm like aware, like, okay, well, I'm trying to make a trading decision right now, but something doesn't feel right. I don't feel like I'm making the best decision right now. I don't feel like this is grounded in a lot of relevant things that would normally make this decision be a good thing. Becoming self-aware of that has allowed me to kind of just elect to delay the decision until I get to an emotional state where I recognize I'm more calm and more grounded and everything, quote, feels right. So now we're talking about intuitionception, which is having intuition within your intuition and having the intuition to know that your intuition is being based off of things that would be reasonable and useful to exercise it in those circumstances under. Whereas also being aware of like, wow, I'm fucking starving and I'm hungry right now and I'm anxious and I should probably eat before I take this next trade. Otherwise, like, I'm just trying to rush this whole process and I'm just trying to get into the trade and my heart's fucking pounding and I feel very neurotic and crazy mentally right now. Maybe it would be better for me to stop and not do anything and elect to delay the decision until your emotional state returns back to a quote normal level. So go have lunch, then come back and then decide whether or not to release or continue the detainment of the prisoner or whether or not to take or not take a trade. Does this provide a useful response for you, Jack?
Yeah, very much so. So also, I think it sounds like your self-awareness is hugely at play as well in being able to moderate yourself and seeing when you are fit for duty and when not. So, and probably in that place also that you seem to have a big amount of self-discipline because you can be like, oh, I won't take this trade, but I'm hungry or whatever, and you're like, but afterwards the trade may be gone, so you have to have enough discipline to be like, okay, I'm just gonna go and eat and or go for a walk or whatever, and if the trade's gone, it's gone, and be okay with that. So that's good to know.
That's true, and that's a good example. All right, so next up we have Merrick. Go for it.
Yeah, Nick, do you meditate?
Yes, I do.
Do you have any, let's say, other habits that helps you better connect with your intuition?
I think the thing that has helped me the most, if we're excluding meditation, because that has helped me the most, but outside of that, I think that not paying attention to other people's opinions has really helped me get a lot closer to the way that I actually feel and doing the things that I believe are in my best interest. Because nobody has the context of your life, for example. Like people might see you jump out of a building thinking like, look at Merrick, he killed himself. That's so selfish. I don't understand why he would have committed suicide like that. Who the fuck jumps out of a building? But if they don't have the context, like inside there was a raging fire and you were either going to burn to death, burning alive, or you could just jump out the window, and that was like the less shitty option. This is the decision that many jumpers in 9/11 at the Twin Towers faced, being trapped with all the stairwells destroyed from the plane impact. And they had to make the decision to jump out. And a lot of people couldn't understand it, but given the context, it does make sense. So when we find ourselves in situations where you're trying to make a decision or you're trying to come to terms with a belief about something, you may notice that other people, especially on social media and the internet and news outlets and all sorts of content you could consume where you can just have an endless drip coffee of other people's opinions on the internet, that can severely cause you to, it can cause your glasses of self-understanding to fog to the point where you start thinking things and believing things and doing things that have nothing to do with you and that don't make any sense, but you're just doing them because it sounds good and it seems like that's the thing and that's what most people think. So maybe, you know, they're right, you could do it. But deep down inside, you feel disconnected from this sense of self and the sense of intuition and the sense of like personal satisfaction, like your beliefs, like you've done things, you're like, yeah, I'm proud that I spent my day today doing this, instead of going throughout the day thinking like, this all technically checks the boxes and I did all this for these reasons, but it doesn't feel right. There's something absent there, which is your feeling of intuition that drives that. So I'd say next to meditation and mindfulness practices, because that has been by far the most helpful thing, that's like 80% of it. Another big portion of that in the whole percentage scale of what has contributed to me getting closer into touch with my intuition, like you asked, the second runner-up would be not looking at other people's opinions and just thinking for myself, looking at like my own experience and evidence and just even self-introspection, like armchair philosophy, sitting back and just fucking thinking about things, just thinking it through for a few minutes, asking, okay, if I think that, what's the repercussions of that? What's the second order consequences? What are the outcomes that come if I believe this and then take this action? What are the consequences of those things? Just thinking it through like a couple steps ahead without looking at other people's opinions, that has helped me so much get closer to my intuition. So next to meditation, that is what I'd say has helped me get much closer to my intuition. What do you think?
Yeah, I like it. And do you meditate like a daily, like you spend, I don't know, half an hour or just 5 minutes? How does it look like?
This sounds against the grain of what most people think of meditation. Most people think of meditation, you sit down, it's like an hour, you've got some sort of Chinese, Tibetan, Buddhist monk music playing in the background, and I'm wearing a red, like an orange jumpsuit. My meditation comes at seemingly spurious moments throughout the day. So when I notice like, okay, I'm going through my decisions and actions and everything really fast, and I feel kind of frantic. I feel like everything's an emergency. Like, okay, I got to go to the bank this morning. I got to do this wire, and then I got to go pick this thing up from the grocery store for Ruby, for my dog, this like ear medication, and then I got to do this and that. And it just seems like it's never ending, and there's so much on the list. Being self-aware enough, or say becoming self-aware enough over the past 4 years, has allowed me to kind of recognize when my brain starts becoming very neurotic. And then because of that self-awareness, this is just another word for it is mindfulness. It allows me to say, hold on, time out. What is the fucking rush? I'm not even enjoying the present moment to moment experience because my brain is so, it's held hostage by some future form of reality, thinking I've got to do all this shit. I'm not even enjoying right now. Like it's like, you know, I may be leaving, walking out the door before I even kiss my girlfriend Bonnie goodbye. And I'm thinking like I could go die in a car accident right now, and I never would have even told her bye or that I love her or anything. What is the rush? And whenever I'm self-aware enough to notice things like that, that is what facilitates and fosters the inspiration for me taking a moment to pause and meditating. Now, truthfully, these meditations generally don't last any more than a few minutes. They're just long enough to bring me into the present moment where I can like sit there, be still, listen to my thoughts, let them run around my head like crazy for a few minutes until they all calm down and they all sit the fuck down and they stop causing like a discursive mental environment. Then once things have, quote, calmed down, it's generally like 3, 4, 5 minutes. I open my eyes, I take a big deep breath, and I'm like, okay, cool. Now I'm gonna go tackle all these things one by one, but I'm not gonna do it in an anxious and obsessive way. And then you can enjoy the present moment much, much, much more. And even better, you can make decisions that have more to do with you, that are in your best interest, because you're closer to your intuition and you're not, your thoughts are not pervaded by discursive thoughts and emotions that cause you to do things spontaneously in a very neurotic and mentally insane way. Instead, you can do things more rationally and less impulsively. So that is how I meditate. It's just at various times throughout the day, anytime I catch myself drifting into a neurotic and wild mental state. Does this make sense?
Yes, it does. Thanks a lot.
Cool. Any other questions from you, man?
No, that's fine.
Cool. Continue meditating, continue being mindful. It sounds like you're on the right track. All right. Well, everyone, we're gonna hop off now because Justin has to go. Justin's got his hoodie on, you know, he's standing up. So we're gonna go ahead and hop on. We're gonna go ahead and hop off right now. So it's good. It was good chatting with you guys. So I will see you guys all on whenever I do the next live session. The rest of you, I'll see you in the close friends group chat. And for those of you in Nick's trades, if you're religious, say a prayer that these JPY pairs finally fucking drop. It's been 2 weeks. It would be nice for something to happen. Anything, even if they go up. But I will see you guys at a later time. I really appreciate all y'all's questions.
Bye.
Appreciate it.
Good
Bye.
day, guys.
Yeah, no problem, guys.